Greetings, Algo artisans. The Fed held rates steady. Is that going to cause Bitcoin to go up, down, maybe sideways? Let's take a look at the charts right now. Remember, nothing we say is investment advice. Please pause and read this disclaimer. Okay, so here we are. FOMC kept rates unchanged. Now, this is an article over on Zero Hedge, and it is the Squawk Box from yesterday, and holding the rates unchanged was expected. Now, there was some talk about how the dual mandate seems to be coming into balance, which gives the Fed the possibility of considering rate cuts. Fed Chair Powell said in the post-meeting statement that inflation has eased but remains above the goal, and Q2 data has added confidence on inflation. Powell added the Fed is maintaining its restrictive stance, but it does seem like a lot of the market focused on the following sentence in that a rate cut would be on the table in September. Now, there were lots of stipulations for that. They needed the inflation to move down with expectations and growth to remain reasonably strong and the labor market to remain as it is, and that would be putting a rate cut on the table in September. However, we do have to consider the election. Now, rate cuts typically precede a recession. There are different theories as to why this might be. It could be that the rate hikes that were meant to cool the economy down have a lagging effect, and so they cut the rates once they see that lagging effect occur, and that effect continues to increase while they're decreasing the rates, meaning that the rate hike slowing down the economy, that effect happens over a longer period of time. So once the economy starts to slow down and the market starts to fall, then they start to cut the rates, and then of course the rate cuts take time to take effect as well. So then you have another 6 months, maybe a year, and then the market starts to head back up outside of some kind of emergency rescue plan. The only issue is that a rate cut tends to precede a drop in the market, and we do have a U.S. election coming up, perhaps one of the most important ones in history, and the last thing the incumbent party wants is for the markets to fall. If there is a rate cut in September, I do believe a lot of mechanisms will be put in place to keep the market from falling. We're just going to have to see how that goes, but for the meantime, the rates were held steady. So let's jump into the charts and see how it might affect Bitcoin in particular. Now, you would think that the dovish news would cause the dollar to get weaker against Bitcoin, and it seems that Bitcoin got weaker against the dollar. So we're looking at a daily chart, and the last couple of days have seen a bit of a capitulation in Bitcoin's price. Bitcoin fell from basically 66,900 and is now below 63,000, just below 63,000. And I did have that lined out yesterday as an important kind of a must bounce, and it does continue to be heading down. The lowest price that we saw was 62,700, and there's a fair amount of liquidity from past price action around 61,000 and also in the high 50s, anywhere from 58,000 to 55,000. And it is possible the price could go down that low. However, if we go back through history here, price has rotated between about 61,000 and 72,000, and the bottom of that range is an area where a lot of people might start to buy, right? It's a good place to buy historically, and therefore it might be a good place to buy in the future. Let's jump in a little bit deeper into the charts. Let's look at a lower time frame, and we can see how markets were affected throughout the last couple of days. So it looks like everything tumbled pretty hard yesterday at about 3 p.m. East Coast, which was about an hour or two after all of the Fed speak came out. So it appears that there was either a delayed effect or there was no effect from the Fed speak. If this Fed speak was seen as a bearish event for crypto, then of course you saw it head down, but there was no change in the rate, and most of the talk was relatively dovish, which means that the dollar should have gotten weaker against Bitcoin, causing buoyancy in the price. So it might just be that there was not a whole lot of effect at all on the Fed speak, and there might have been money sitting on the sidelines that finally got back into Bitcoin or out of it, and we saw the price head down. So now we're seeing Bitcoin again below 63,000. A little bit of very low time frame support seems to be holding the price right where it is, and of course it could pop up, but the real question is, over time, will it end up going down? Are we going to see price just continue to slide down like this, or are we going to see price actually pop back up and maybe slide down in this kind of fashion? Whatever happens, I don't believe price is ready to head back up. I do think the price is either going to stay at the current level around 63,000, or it's actually going to continue down a bit. So why don't we go ahead and take a look at the liquidity zones, because since this morning they most likely have changed. There's been a lot of price action on the lower time frames. So we see a fair amount of liquidity between 66,000 and 67,300, which is pretty similar to what we saw this morning. So this area here has got a lot of liquidity in it. And then we have liquidity below price, quite far below price though. Any notable liquidity is around 56,000 area, which that was a low back in July. There was a capitulation down to that level. So at that time, we did see price head down there. Let's look at a higher time frame here. And we saw that double bottom occur. So there is some liquidity around 56,000, which is pretty far away from price. So we'd have to see a pretty substantial capitulation for price to go down that far. And there is a lot of bearish pressure on the markets as it stands. I don't really see Bitcoin heading up anytime terribly soon. Like I said, if anything, it's going to stay where it is before it heads up, or it's going to head down. And I do think a very likely area for us to see either a strong bounce or at least a temporary bear market rally. And I mean bear market on the very short term. We're not in a bear market, but just a bearish kind of move and then a quick bump up like this, and then perhaps a move down, or it might actually continue up. For the moment though, I don't see any of the major liquidity zones seeing any action right now. It would require some pretty strong market moves to get there. Right now, price is wanting to go down, so this liquidity to the upside probably is not going to be touched unless there is a very quick entry by the bulls to flip price around. A very strong entry by the bulls would be what's required for that. So again, price is going to stay where it is or head down for at least the rest of the day and maybe longer. We're going to see about it though. Again, as things change, I reevaluate and we can go from there. Let's take a quick look at the equities market. We'll look at the SP500, and the SP500 has rallied pretty decently. And I do still hold the $6,000 target that I've been talking about for several months. Prices certainly headed up towards that, but we have seen in the last couple of weeks price falter a bit. Now it did double bottom right here sitting at 5,400, and after a double bottom like that, there's a decent chance the price will continue up. So I am taking a look at the algos to see if there is an opportunity to enter on the way up. As it stands right now, this double bottom is bullish, but it has gone back down since, and I was waiting for the rest of the trading day to go through before I was going to try to enter any positions on the SP500. But provided that we do get a move back up, I find a trade like this to look rather interesting. Some kind of entry around here, maybe a little bit higher, and then a hold up until about 6,000, maybe a little bit before 6,000. But a trade like this is a beautiful trade. And again, I'm going to have to make sure that the algos tell me I can take the trade. These indexes are known for kind of taking a last minute dump down, take people out of their trades. You can see it right here. So we'll have to make sure that the time is right, but I might go ahead and just lay on a position here for a higher time frame and let the SP500 carry me into some nice profits. Again, the FOMC, you could say, was a little uneventful. Holding rate steady certainly wasn't bullish for prices across the board. The talk was a little dovish. We did see some pretty nice action on the indices during that time, but really everything seems to be pretty uneventful outside of some very short-term moves. And it is August. Most of the markets don't really have a lot of action in the summertime. There's not a lot of market activity. A lot of your muckety-mucks are taking vacations. A lot of your retail traders aren't really trading. They're also taking vacations. So this tends to be a low volume time. So at this point, I don't think it's really a big event. I think the thing to pay attention to is the verbiage, possible rate cut in September. But again, my instinct tells me we probably won't see a rate cut in September. But if we do, there's a really good chance there will be a lot of machinations keeping price from taking a dive. There will be volatility crushes. There will be all kinds of stuff to keep the market from falling, most likely, because again, it's an election. And if the market falls, the public is going to perceive that as Biden not doing a good job, and therefore Harris not doing a good job. It doesn't mean that's how it is, but it is how the public will perceive it, and it will be a major selling point for Trump in the election to say, hey, look, the markets are terrible. Or it would be a selling point for Harris to say, look, the markets are great. So that's why I think that we probably won't see a cut, or if we do, prices will be held up. And I know it's counterintuitive. People think, oh, they're going to cut rates and the prices are going to go up, and over the long term, that is true. However, generally, after a cut, prices take a tumble for a while, and then they go up later. That's usually how it goes. And that's all we have time for today. I hope this video was helpful. Please come over to algofactory.tech. We teach people how to build their own trading method, otherwise known as an algorithm. You don't have to know how to code, but if you do code, we can put you on the path to where you can build something that trades for you while you're not at the computer. If you just want to trade manually, which is what most people are doing, then that is, of course, something that we can help you do and help you have the capability to possibly extract money out of these markets on a regular basis. And while we do focus on crypto for a lot of these videos, I'm actually primarily a Forex trader, and you got to know that crypto doesn't go forever. it goes for about a year, year and a half, and then for a couple of years, there's not much going on in crypto. And if you want to be a trader, you're going to want to understand how to really trade, how to put on those big boy pants, because what's going to happen is eventually crypto's going to flatten out and the meme coins aren't going to be what they used to be, most likely. I've seen it enough times. I've been in this game since 2017. I don't expect that to change. So come on over, learn how to trade. As a matter of fact, we got some pretty happy customers who are already down the path of success in their algo building. Let's hear from one of those right now.
Hey, Cowboy V. I just wanted to give a heartfelt thanks for putting this project together. I initially joined Algo Factory a year ago, concerned about a repeat of the 2008 Great Financial Crisis and the prospect of losing my job again. Within 12 months, under V and Cowboy's expert tuition, including live reviews, I've created a profitable algorithm launched across a selection of assets. Now, facing the prospect of redundancy and a nice fat severance package to trade with, my current worst case scenario is to keep my job. Thanks again, guys. Really appreciate what you've done here.
AlgoFactory.tech. Trade your job, upgrade your life, and we'll see you on the next one.